Hello, Turners, and welcome to this daily market commentary for Thursday, the 17th of October 2019. Apart from the usual tantrums in Washington, D.C., today was all about the Brexit negotiations. Yesterday they were close. The DUP party from Northern Ireland weren't happy, but today has brought the headline that many people were waiting for, an agreement between the UK and EU on a Brexit deal. Cue euphoria. But then there are the caveats. It must be ratified by the UK Parliament and the EU Parliament. The DUP still didn't appear to be buying it, and without their support, Prime Minister Boris Johnson will struggle to get the necessary votes in Westminster to have it ratified. So more deep talks are required. So what does this all mean for FX and equities? Well, the initial reaction was very positive with sterling, running up from 128 figure up to 129.90. We saw euro following, rising up to 111.40 from 110.80, and even dollar yen got a boost from 108.75 up to 108.93. But once the market had had time to digest the headlines, it became obvious there are still significant dangers that the deal will not pass at Westminster, and sterling came crashing lower down to a low around 127.50, and we saw dollar yen drop back down to 108.55, despite equity markets remaining fairly positive. The FTSE is initially up 0.6%, with an hour to go in the trading day, and US equities open higher. The Dow Jones initially up about 100 points. The traditional risk-on currencies have all rallied as well, with Aussie up to a high of 68.33, Kiwi 63.46, and dollar CAD had moved down to 131.45. As the US day progresses, sterling rises back above 128 figure to 128.60 amid renewed optimism that the Brexit deal would win UK parliamentary approval. US equities do, however, give up most of their gains as the usual battles and rhetoric in Washington continue. Gold is the main beneficiaries of the equity sell-off, trading up as high as 1497.30 at one point. And as the day grinds to an end, US equities close marginally higher, with all three major indices showing gains of between 0.1 and 0.4%. In FX, Aussie, Kiwi and CAD all in the day a couple of spreads off their highs. Euro finishes at 111.25 and dollar yen at 108.65. And the mighty pound takes a well-earned rest at 128.85. Just as an aside, as you read this, probably for most of you starting with Friday, keep one thing in mind about sterling. There is a session of Parliament over the weekend that will be used to either accept or reject the Brexit agreement agreed upon today with the EU. Either outcome could lead to a significant gap at the open on Monday morning in Asia, so please be aware of that if you are running risk over the weekend in sterling. There is the potential for a significant gap. To round the day off, I just wanted to quickly look, not at sterling. I think we've looked enough of that sterling or one form or another this week, but actually at the Australian dollar. Better than expected Australian employment data at the beginning of the day gave the Aussie a welcome boost with a rally from 67.51 up to a high of 68.33. The overall positive risk environment and a continued strong start to the US earnings season, coupled with the Brexit agreement, certainly helped. But if you look closely at the hourly chart I have up in front of me here, you will see we've met resistance at or very close to a level which I've mentioned many times. I've got the line really drawn here at 68.32, but as you can see, we had the initial touch here, we had a couple of goes here, then broke below it, a couple of attempts to go above it, finally did spike higher, then acted as a line of support before being a bit of a pivot to come back lower again, and then today we've bounced back up to that same level, and thus far, at time of writing, we have failed to break above it. So interesting that this level repeatedly comes up on the charts as being, either resistance or support or a pivot. Obviously, from here, plenty of different ways to trade it, but something interesting. And I guess if you're looking kind of a bigger picture here, you could almost say we have a bit of a head and shoulders going on if we were to move lower from this level, with the head obviously being here above the line, and then down here, I suppose you could argue somewhere around the 68.70 area, you could argue that that's the shoulder level. So just something to keep an eye on going forward. That's assuming you're sick and tired of looking at sterling. And with that, I shall bid you all a pleasant last day to the last day of the week and into the weekend. Look forward to speaking to you soon. Cheers. Bye.